Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about BTC USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the on-chain data to see how Bitcoins are moving on and off from exchanges. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing exactly the previous cycle high and rejecting it to the upside. This is from a macro standpoint. In fact, what we can see is that exactly from this level, all the previous bear market was created. Here we had the halving, the market entered into a bull market. Then we had the bear market, which in my opinion ended exactly here with the test of this previous cycle high. And in fact, I did speak about Bitcoin when the market was here, explaining all the reasons for which we could expect this rejection to the upside. And in a situation like this, where we are getting that rejection to the upside, I do expect more bullish continuation. However, I do not expect the market to create new all-time highs before 2024, only after 2024 and the next halving. Only at that point, I expect the market to create new potential all-time highs. Now, before we continue with going on the lower time frames, I want to say another thing here on the monthly time frame. I want to show how at the moment the market is testing exactly this previous monthly support, which is now turned resistance here. Now, until the market will remain below this previous support and resistance, we could expect a rejection to the downside and then more bullish continuation. So there is a possibility to see short-term bearish price action and then more longer-term continuation to the upside. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, it is quite clear how we just had a massive impulse to the upside. Now, as for the situation that we have seen on the monthly, also here on the weekly, since we have the impulse and the start of a correction, we could expect a bit of short-term bearish price action and then the bullish continuation to the upside to start. From a pattern perspective, we can also notice that as we have an impulse and the start of a correction, if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements lining up exactly at this area that the market could definitely want to go and test before then continuing higher. So also here on the weekly, we could expect a bit more bearish price action and then the rejection higher. Going down on the daily time frame, what do we see? Well, from a daily standpoint, we would have, if the market creates a move lower, exactly the situation that we would expect. In fact, if from here the market continues lower, we would have the creation of this M pattern. And as I explained many times, after the creation of an M pattern, you would expect a rejection to the upside for the completion of the pattern at the neckline, which is the previous support turned resistance. So if we get that bit more of bearish continuation away from this level, that would be perfect because we would have the test of that weekly support that we have previously identified at the Fibonacci levels, and at that point we would also have a bullish pattern here on the daily time frame, which is this M pattern, after which we could expect a rejection to the upside for the completion of this pattern at the neckline, which in that case would be this previous support turned resistance here. Now, if we go and see what we have when it comes to the on-chain data, so how Bitcoins are moving on and off from exchanges, what we can see here is that the white line is the price, the purple line is the amount of Bitcoins on exchanges. As the price was first dropping and then recovering, the purple line, so the amount of Bitcoins on exchanges, has only been dropping over and over again. Now, what this creates is massive illiquidity in this market, because this means that a massive amount of Bitcoins are getting bought and moved away from exchanges, potentially in cold storage. So When demand will increase or when the amount of Bitcoins emitted into circulation will be cut in half, which is exactly what will happen with the next halving in April 2024, at that point, price should increase to accommodate for that new demand. So at the moment, the fundamentals are actually very, very strong. So from a technical perspective, if we will have the creation of this M pattern, that will definitely increase the probabilities, at least for the completion of this M pattern at the neckline. So if the market will melt lower, creating this M pattern, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the on-chain data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing potentially is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll lower past the testimonials, you will see that you have the possibility to gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out as soon as possible at transparentfxtrading.com. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.